and it's good to be with everyone. It's been a long 2 years, I think, for many of us, which has been an underlying message today, and I have the privilege to talk to you all about the UK market and central London, specifically a place where I've spent a lot of time over the years. You know, there's a lot of themes that we're going to talk about as we're going through this presentation. Some of those same themes will pop up when we start to talk about the US. These are just 6 themes which define and represent why London has become a global city, but also a gateway into Europe. And 3 of the ones that are most critical at the moment that are going to really go through much of this presentation is, one, the topic of talent. I think a lot of us are talking about talent and the criticality of talent. When we look around the world, we see London as a top 3 market for talent, behind only the Bay Area and Boston in the US. We also think about London as a diverse market, not only a diverse market, but one which is diversifying increasingly with the growth of tech and life sciences. And what I also think is one of the most impressive things when we reflect on the history of London is the role of infrastructure, and the role of infrastructure in creating commercial opportunities for groups like Brockton Everlast and others which are playing in the London market. And when we look at this ecosystem of all of these factors, we think about the notion of an innovation geography, where you have a combination of people, talent, companies, and also institutions that create an innovation ecosystem that drives stable, resilient performance, and we're certainly seeing that coming out of the pandemic in London. I'd be remiss if I didn't briefly hit on the economy, in particular given what's happening in the world. The UK was the fastest growing economy in Europe in 2021 as we saw that rebound. As we look to 2022, we are going to see a slowing of growth. This is a dynamic we're seeing everywhere. The conflict that currently is happening in Ukraine is going to further slow growth. We're also in a period, which we're all talking about, of elevated inflation, and that inflationary pressure is going to be higher and for longer as a result of the conflict in Ukraine. But it's important to reiterate the strength that we are seeing in the office employment market. Unemployment in the UK is sub 4%, and we are expecting that momentum is going to drive the UK employment market to fully recover in 2022. And this is evident when we look at the strong rebound in office demand. I'm not going to go through all of these statistics, but I think there are a few critical ones that I would call out. We saw a very strong take-up in London offices in the second half of 2021. We saw an 80% increase in office leasing, and we expect that to fully normalize in 2022, getting to around 10 million square feet. But what's more important is if we look at the under-offer space in the London market, that's been very strong for the past 3 quarters. There tends to be a 3-month lag on average between under-offer space and when that lease is ultimately executed, and we're expecting that to remain above that 10-year average mark ultimately through 2022. And a key driver of this has been the diversification of the economy in London and the diversification of demand for offices, increasingly through the growth of tech and media. And what you'll see here, which is vastly different than what you would have seen in London certainly 20 years ago, is the growth of tech. Tech and media are now driving almost 30% of demand in the UK market. You'll see some names here that I'm sure most of you recognize. Big tech has solidified London as a growth market. You'll see some of these companies are occupying more than 1 million square feet in the London market, and they're some of the largest tenants in London. And what's also interesting is that these tenants are transforming submarkets. They're creating new submarkets. If you think about what's happening, as an example, in King's Cross or in Battersea. And that is in line with what we've seen over the history in London. You know, we're looking here just at the last 5 decades in London and how submarkets have transformed to accommodate different occupiers and shift in the occupier market. So whether you're talking about the growth in global financial services in Canary Wharf in the 1980s, if you look over the last 10 to 15 years in the growth that we've seen in areas like King's Cross with the growth of tech, or if you look right now at the momentum that we're seeing around areas like White City, around Battersea, but also around South Bank, given some of the infrastructure improvements which are happening around London Bridge and Waterloo Station. And it's not a zero-sum game. I think one of the most interesting aspects of London is how neighborhoods continue to reinvent themselves. So just as much as we're talking about some of those new submarkets which are emerging in the 2020s, if you think about the 2010s, King's Cross remains a highly coveted submarket that people are paying a premium for. And King's Cross is reinventing itself in becoming a bit of a life sciences hub as well in London, given its direct access to Cambridge. And if you think about some of the momentum around Paddington and Paddington Square, we're seeing the same life sciences momentum start to build given its connection into Oxford. And when we talk to major tenants and corporations that are looking at space in London, increasingly, it's not as much about this submarket or that submarket. It's about finding the right asset in the right part of London where they can ultimately thrive. And for that reason, when we look at rents, we've already seen prime rents return and fully recover from where they were in the pre-pandemic time period. And this validates the opportunity that occupiers see in London to access innovative, productive talent. And it ultimately also validates the opportunities that we've seen for investors in London and in the UK to be a part of that innovation ecosystem, in particular when they're moving upon the bigger themes around talent, high growth industries, and also around infrastructure. But the other theme that I think is quite critical is in thinking about the flight to quality, which we're also seeing assets to outperform. Which brings me to the problem that we see in London, or a problem that we see, which is that we're in a market where tenants are favoring quality. We're seeing about 25 to 30% of office demand in London is looking for newer construction or refurbishments. But we see quite a limited development pipeline. Most buildings are reliant upon pre-leasing. We've seen delays in construction, pushing the development pipeline out to 2022, and we expect it to be pushed out even further. And what we're likely to see as a result of that is a real shortage in quality office supply in London within the next 2 to 3 years. And where we're going to see the even greater shortage is as we've seen the increased focus, Nathan was just talking about it, on sustainability. We're seeing an acceleration in commitments to net zero and science-based targets that we believe that within the next 5 years, there's going to be 2x at least the demand for net zero carbon buildings than we see in the current supply or in the supply pipeline. That's a shortage of at least 5 million square feet, and we see that gap expanding, which creates an opportunity to also be a part of green retrofits, green refurbishments, and green developments in the London market. We've seen the investment community respond to this. We've seen a very strong recovery in capital flows. We saw in London specifically the most active year for investment since 2017. In 2021, that was a 66% growth. And one of the defining characteristics of that recovery was the return of cross-border investors. As you can imagine, groups that were investing interregionally were inhibited operationally during the pandemic. And a lot of the liquidity that was within the UK and central London was coming from domestic and regional players. And we've seen that reemergence of cross-border capital, which is quite critical in London as the most global investment market in the world. And that ultimately has kept prime office yields stable and in fact compressing. We've seen margins in the lending markets recover, and in fact for top quality office buildings, we have seen margins compress even below where they were in the pre-COVID time period. And this creates a compelling case, risk adjusted, for investing into London offices, in particular as you're looking on this chart compared to other major markets in offices in continental Europe. So we are in a time period where we are seeing uncertainty around the future of office demand. But when we think about these different factors and we think about some of that momentum that we see in London, we firmly believe that a lot of these tailwinds are ultimately going to drive a supply-demand imbalance in the London market, in particular for quality buildings and for quality spaces. So what's next? We've already heard a little bit about life sciences, and when we reflect back on the past century, we believe that we are in a fourth wave of innovation in life sciences. And we're really only at the beginning of it, where we're seeing the merge of science, technology, new techniques accelerate drug discovery. This is most concentrated in the US and the UK. It was amplified by the pandemic. And we're expecting that over the next 5 years, we're going to see the growth of pharmaceutical sales increase 2x what we've seen over the last 5 years, which ultimately creates the opportunity to be a part of the real estate solution. And it's not just pharmaceutical sales. When you think about the life sciences sector more broadly, it's pharmaceutical companies, but it's also R&D and the entire process around R&D. It's med tech companies, it's health tech companies, each of which have a different real estate need, whether it's wet labs, dry labs, offices. And this is the area that's the opportunity in the US and the UK to be a part of that ecosystem. And when we look at where you tend to see demand, these are some of the major drivers of demand in the life sciences sector. And I'll only call out a few of these. We've already talked about talent. Second, it's important to acknowledge the criticality of access to intellectual property, thinking about major institutions. Third, thinking about that ecosystem of companies, bringing that commercial mindset to the innovation that's happening at institutions and whatnot. But fourth, it's also the capital. And it's in the capital where we've seen an acceleration in the life sciences space. And if you're just looking at the venture capital that has gone towards life sciences in the UK, it's been in excess of £5 billion in 2021. It was a record year. What we tend to see is that there's a 4 to 6 month lag between funding to a company and when they ultimately lease space. So this is a leading indicator, which we expect to continue to be the case in 2022, in investments into life sciences, which are going to create a need for life sciences spaces. And if we look at some of these different data points through the landscape of the UK, there's 3 markets that really mature as the most advanced. And those are Oxford and Cambridge, the most mature. I think probably a lot of us understand when thinking about intellectual property, the ecosystem of partners and companies, why those are as mature as they are. But you also see a lot of growth in London in particular, given the accelerators, higher education, UCL in London, which is creating what we refer to as the golden triangle between London, Cambridge, and Oxford. And that is the most advanced cluster and probably the highest growing cluster outside of the US in the life sciences space. You're at a market where you have very high barriers to entry, you have vacancy, which is sub 2%, and you have less than 1 million square feet of space, which is currently under construction. And what that's driving is very strong levels of growth. We're expecting that we'll see 2x the amount of growth in the Golden Triangle in rents as compared to what we'll see in prime offices in London in 2022, which is ultimately equating to a premium of probably 20 to 30% in rents and also a cap rate and yield premium in the marketplace. So if you think about what we're coming out of, we've experienced a period of massive disruption with the pandemic. With massive disruption comes opportunity. I've just spoken to 2 of the major investment themes that we have conviction around in the markets. One being around investment into innovation geographies around the world, and London is certainly one of those top innovation geographies. The second being investment in life sciences, with UK life sciences being the most dynamic, growing markets. But there's also a few underlying themes I would just caution everyone to keep in mind as you're thinking about the opportunity from an investment perspective. And these are 3 underlying themes that I've already mentioned. First is the focus on sustainability and ESG. We are seeing a real shift from talk to action, and we see an undersupply of product in the markets to meet the needs of major corporates. We're operating in a shortage economy where increasingly it is difficult to hire. A lot of us have read about that. Wages are increasing, and companies are increasingly thinking about buildings and spaces as a means of differentiating. And lastly, we're seeing polarization, which I think reinforces the theme of this overall conference, which is around the opportunity to bring quality spaces to market to ultimately be a part of that innovation and productivity ecosystem with companies. Thank you.